Sanlam Private Investments, or SPI Equity Fund, established in 1999 with 66 billion rands worth of assets under management. Now to talk on the SPI Equity Fund and top holdings, joined from our Cape Town studios by Alwyn van der Merwe, who's director at Sanlam Private Investments. Hi Alwyn, now this particular part of your operation, this fund, 13 months, why did you form it and what's it consist of and how's it been doing?
Hi, good evening, David. We started the fund about 13 months ago, and the reason for that was simply Sanlam Private Investments is a private client stockbroker and asset manager, and we normally run bespoke portfolios, predominantly equity portfolios for our high net worth private clients. However, we had a legacy of smaller clients in our portfolio, and instead of showing them the door, we decided that we would like to accommodate them still within the Sanlam Private Investment stable, and give them the same expertise, and we try to house them in a unit trust fund. And therefore we started the fund about 13 months ago. From an investment performance perspective, we had a return of just over 12% for the 13-month period. If you look at the money made results, you know, it's 34 out of 121 funds, so we just missed the top quartile, so almost top quartile performance for the particular period. So the fund has done rather well. If you look at the portfolio, just like the portfolios that we would run for our clients, you know, we pick the shares based on valuation and profitability of the companies, and we try to keep it focused. At the moment, we only have 18 counters in the portfolio, and if you compare that, I guess, with the average general equity unit trust fund, you would find that that is significantly less counters, because we would like to pick shares where we have conviction.
Well, you've got very familiar names in the top five. You've got Anglo American 8.9%, FirstRand 7%, MTN 6%, and Sasol 5%. So you can talk about those in a moment. But at the top, at 14.5, you've got the Sanlam Investment Management Best Ideas Feeder Fund, which sounds incestuous, but obviously there's a good reason for it.
Yeah. Look, we are allowed to have up to 30% offshore exposure in the fund. I certainly have the view that if you look at value globally in the equity markets, that we, unlike 12 years ago, we see significant value in offshore equities, and we would like to give our clients exposure to it. We don't have the in-house capability within SPI to pick those equities and manage that on an active and a dynamic way. And we've decided to provide Koki Koeman at Sim Global to provide him with a duty to pick those shares for us. It sits nicely with our own style. If you look at the particular fund, it's done very well over a 3-year period. And Koki goes for value, and you will also find, quite often you will find very unfamiliar names in Koki's fund where he picks the value. So it sits quite nicely with us.
Yeah, you know, I've got a lot of respect for Koki. I've just come back from Omaha where he was, and I'm actually a holder of that Global Best Idea, so I can endorse exactly what Alwyn's saying. But Alwyn, just looking at that breakdown, a lot of resources, you 21% in resources. That's quite a high conviction core. With Anglos at 8%, where's your other investments?
Yes. Look, David, if you say you did right, we've got 21% in resources. The benchmark of the fund, and not that we are you know, benchmark huggers at all, the benchmark of the fund is the all share index, and as you well know, resources is about 40% of the all share index. So we half the weight of the all share index in resources. The other resources that we have, as you've mentioned, we've got Anglos, we've got Sasol, we've got Billiton, and we've got about 2.5% in Exaro. The rest of the money, of course, sits in industrials and financials. On the financial side, one of the top shares in the portfolio is FirstRand, where in fact we've got more than 8% in FirstRand at the moment, Standard Bank and Old Mutual. And then on the industrial side, we've got a few mid-cap shares in there. We've got Steinhoff in there. We recently acquired Wilson Bailey Homes. We've got a small IT share, Pinnacle, in the portfolio. So I think it's a combination of, and by the way, British American Tobacco, we've got just over 5% in British American Tobacco. So it's a combination of quality blue chip shares, where in this quite uncertain environment gives us a bit of comfort, but also a few shares in there where we reckon that the market is overly worried about those shares, and when hopefully when the operational performance comes through, the share prices will respond to the operational performance.
You've only got 15% offshore. You've got a capacity to increase that to 30%. Do you feel a desire to do that at the moment, or with certainly some of our consumer shares looking at the top end of the market? Do you have any,
Yes.
inclination to give more money to Cookie?
Yes. Yes, we have about 7% in cash in the portfolio, so that is the obvious area where we can take money from and invest more in Cookie's fund. Ultimately, I would like to take it higher. As you know, global equities since the lows of October gained about 20 to 30%, depending on which market you're talking about. And I'm just hoping for it might sound funny to some of our investors. I'm hoping for a bit of a correction. If you do see that, given the amount of uncertainty that we see on the macro side, I would certainly use that opportunity to increase the exposure on offshore equities. Globally, locally, the shares that we have, I think if you look at the market, arguably the resources shares look cheap, certainly on a price to earnings basis. We don't own any food retailers, and in fact we don't own any retailers in the portfolio because we simply think that they're too cheap, too expensive. And it's also quite interesting, even if you look at the safe food retailers, if you look at it since the beginning of the year, the sector as a whole started to underperform the all-share index. So it seems to me that last year was not a good time not to have those food retailers, but certainly over the last 4 months they started to underperform the market.